Well, hello, everybody. My name is John. I'm one of the founding partners of Folla Capital, and we're just thrilled that you're here today. Thanks for making the time. We really appreciate it. I'm joined by Mike and Jeff from Oplign. How you guys doing today?
We're good. Thanks, Tom.
Thank you.
Yeah, thanks for making the time. Excited to get rolling here. We got a lots to talk about. My job here is to MC this thing and host it, and to kind of set the stage with what we're talking about when we say Capital Quadrant. But really what I'm doing is setting the stage for an example of a private business, veteran-owned business, coincidentally, that is raising capital from the community using Reg CF. So to kind of set the stage for that, I'm going to cover some material. Folla Capital is an SEC registered broker-dealer. So therefore, we're duty-bound to do things by SEC rules. And one of those things is to be totally transparent with you with this disclaimer. We're going to talk about one of our client companies today, Oplign, obviously. But to make an investment decision, we highly encourage you to go to our website where, per the regulations, all their information is there for you to review and to review all of that information before you make an investment decision. We're going to summarize some things today and make some comments in isolation, but really what we urge you to do is review all the information if you would like to make an investment decision. And please take a moment to take a look at this disclaimer before we move on. All right, so I'm going to summarize some information about what we at Folla call the Capital Quadrant. But that information comes from a couple of sources, which are publicly available. The document on the left is a white paper issued by the SEC. It was issued in 2018, but it talked about trends since 2009, and those trends continue today, and I'll address those trends when I discuss the quadrant with you. The item on the right is a website. It is a database that the Federal Reserve maintains. And the third tab from the right, economic research, has lots of great information in it, some of which I'm going to refer to today. So some of the conclusions we're drawing and the data behind the quadrant is based on this publicly available data. So a quadrant typically has two axes, as ours does. So the horizontal axis on the bottom represents domains. So there's a public domain for capital and there's a private domain. And then across the vertical axis, we have markets. We have a primary market and a secondary market. Many of you may know this, but there's a lot of people that don't know this, what I'm about to say. So what most of us are used to is the public secondary market, as represented by something we're all familiar with, which is the public stock exchanges. That is referred to as the public market, but it's the secondary market. When we actually buy stock on the public exchange, we're not buying from the companies that stock represents. The money we pay for that share or whatever we buy does not go to the company. It goes to the other person who holds the stock now that is selling it to us. That other person, if you're a long investor, thinks that stock price is going to go down and you think it's going to go up. So a transaction takes place. It's between two individuals, not the company issuing the stock. That's called the secondary. That's why it's called the secondary market. The primary market for public companies is when a company goes public. That's when there's initial public offering or IPO, or there's a subsequent issuance of a new tranche of stocks. So say you have a company that's already on the exchange, they need to raise more capital. They'll actually create new stock, work with a Wall Street bank to issue that stock to the public. And with some exceptions, most companies that go public work with a Wall Street bank that does this for a living. They're investment banks that actually buy the stock kind of wholesale, put it in inventory, and then they facilitate the process of selling that to the public. So it actually goes through two steps during an initial public offering with some exceptions. So that's when a company goes public. That's a primary market for a company that goes public. But even then, we as the general public generally don't participate in that. It's very difficult to get in on that. The private markets, primary private market is where something called private placements take place. And this is the quadrant that Oplign fits as an example. This is a private company that's raising capital, but they're not going to use the public markets to do that. They're going to use the private markets to do that as a primary way for them to raise capital directly from investors. And then finally, we have the secondary market, secondary private quadrant. And this is where mergers and acquisitions take place. This is where private equity, large investment groups, big companies buy smaller companies. And this is when, transactions take place between different entities that don't include the public. That's mergers and acquisitions land, basically the domain of venture capital and private equity. The lower left is typically where angel investors operate in venture capital. So venture capital, depending on the size of the firm and its funds, operate basically in both quadrants on the left side. Well, why is this important and why am I boring you with this? Well, there's a lot of things about this that most of us don't understand or nobody ever tells us. So one thing is that 99% of the companies in America, 99% of them are in the lower left. They're private companies, just like Oplign. They're not public, obviously, but most companies are in the lower left. A lot of people think, most companies I hear about on the stock exchange is a big part of the economy and businesses, but actually that's not the case. In fact, only 1%, obviously that's what's left, are public companies. And what's even more interesting is that the SEC has a definition of two kinds of Americans. There's an accredited household and a non-accredited household. An accredited household has several layers of definition, but basically it's a wealthy individual or household. It's a household that has at least $1 million in net worth, or they make $200,000 a year in salary, or $300,000 if they file their taxes jointly if it's a couple. There's more to it than that, but generally speaking, that's the definition of accredited investor. So if you apply that definition to households in America, 11% of households in America are accredited. And that means that what's left, 89%, are non-accredited. But what's interesting about this is that means that 89% of Americans, most of us, can only legally, with a few exceptions, invest in 1% of the companies in this country on the public exchange. And that means, conversely, that 11% of the American households in this country are allowed to legally invest in 99% of the private businesses like Oplign that are out there historically. What the reports and data sources I shared with you also indicate, full disclosure, there are about 9% of non-accredited investors that have participated in the lower left historically. That's because there's a few programs, SEC exemptions, that do allow non-accredited investors to participate. And that number is around 9%. But the vast majority of us only invest in companies when we do on the public exchanges, and we're only able to invest in largely 1% of the businesses in America. Well, this is what happens with companies when they start life in the lower left, which most companies do. Almost all of them do, like Oplign. So they're private businesses or startups. They start in the lower left and they need capital. Typically, traditionally, that capital is raised through traditional investors, angels, venture capitalists, through a process that's well-defined and under one of the SEC exemptions. The word exemption is used by the SEC to describe these programs because under these programs, these companies are exempt from having to abide by the rules to go public. So under these exemptions, capital is raised, and then these companies end up doing one of three things. Number one, they could go out of business. A lot of them do. It's risky. So companies get money, they try, there's no market for a variety of reasons, or they're mismanaged, and they do go out of business. It happens a lot. But there's other two things that are highly likely as well. The first thing that could happen is that company goes public, which is what most people think happens. You start up, you grow, you go public. That's typically the plan A for a lot of companies. But believe it or not, most of the time, statistically, they go the other route. The third thing that can happen is that company grows to a point where it gains in value, and then that company is purchased by a larger company in its industry, or for some other reason by a large company, or a private equity firm buys that company. And what happens when that happens, in either case, that's called a liquidity event. You either go public or get bought in the mergers and acquisitions quadrant. At that point, those original investors get a return on their investments, usually, and oftentimes it's a sizable return, sometimes it's not. But at that point, cash becomes available to go back to the investors. I know this is rather elementary for many of you maybe on this call, but what's pretty remarkable is that starting in 2017, for the first time in history, and it hasn't stopped since, more money has been raised for companies using the private placement, the Reg D offering specifically, than all of the public markets, both debt and equity combined. The lower blue bar you see at the bottom, those are IPOs and additional issuances of stock. This is what we read about in the headlines when companies go public, but it's a small portion of the amount of capital that's invested in this country. The private placement Reg D offering surpassed the public markets in 2017 and hasn't stopped since. Well, why is this important? Well, when the Securities and Exchange Act became law in 1933, it had unintended consequences. So today, 11% of American households are accredited. But look at this. Over 75% of the wealth in this nation is held by 11% of the households in this country. And this is remarkable. And this could be an unintended consequences of how the securities laws have been written. That's just an opinion, but you can draw your own conclusion. There are reasons for this. But here's the good news. Non-accredited investors can now invest. Congress took action. The SEC laws have been modified many times by Congress and signed off by the president. And a recent advancement was done in 2012 when President Obama signed the Jobs Act of 2012. And part of the Jobs Act of 2012 was to add a new sixth program or exemption called Regulation CF, Reg CF for short. The CF stands for crowdfunding, but it's called Reg CF. And it created this new sixth exemption, and it allowed a couple things. So for the first time since 1933, you don't have to be accredited to participate in investing in a private placements if it's done under Reg CF. Again, to be clear, there were a couple of other of these exemptions where you could, non-accredited could participate. But by and large, it didn't happen, as I described earlier. But now Reg CF, anyone can invest. And then secondly, the SEC acknowledged that we have this thing called the internet that wasn't around in 1933, and Congress recognized that. So now under regulations, SEC and FINRA oversight, entities like Folla Capital that are registered with the SEC or FINRA-approved platforms can offer these private placements under Regulation CF using the internet. So this was the two big things about Reg CF that is really exciting. So what does that mean for us today, given this capital quadrant? It means this, that Reg A and Reg D in the lower left have historically been the only exemptions that were used to raise capital. And I told you what happened there, and you can see what happened with the wealth of this nation. Now, any one of us under Reg CF can participate in private placements as well, and that's the exciting new thing about it. So with that as a bit of a stage setting, Oplign is an example of one of these companies using Reg CF to raise capital. I'm proud to say that in about a month, we've raised about $180,000 as part of their campaign. Their target is $350, and their goal is $800. So we want to get to at least $350 with a best case scenario, topping off at $800. That's the way Reg CF works, but I'm proud to say they were already $180 into it. And I think you'll see why next. Again, I want to reiterate, if you're interested, please visit the website, which I'll pull up at the end and review all the information. And to provide a summary now, I'm going to turn it over to my colleagues who are going to tell you all about Oplign. Over to you guys.
Hey, thanks, John. Hey, good afternoon, everybody. I'm Jeff Gibson, one of the founding partners of Oplign, and I'm here with Mike Rowe, founding partner and the CEO. So next 20 plus minutes, we're going to walk you through how we built a rapidly growing business around fixing an endemic and systematic problem in the labor market, a problem that costs companies right now a lot of money and time and frustrates job seekers to no end. Mike is going to cover the tech and how we solve that problem. But before we do that, I'm going to give you some background and context on who we are and how we got here, and where we're currently at. So there's 5 founding partners of Oplign. Most of us have very similar backgrounds that includes military service to include specifically in special operations. We got 2 SEALs, we got 1 Green Beret, 1 Force Recon, advanced degrees, corporate America time, and at least probably 12 plus years in government contracting, specifically in defense services sector. And that's really going to come into play in how we built Oplign going forward. Our CTO was not in the military, but he used to write U.S. Navy tech manuals for the U.S. Navy for submarines and surface ships, as well as helping design and build America's Cup sailing racing hulls before getting his master's in computer science at MIT. And then he spent his time fixing and rebuilding ERP software around the U.S., which also plays into our technology. So the team is very experienced, proven performers. We've maintained that special operations character, traits of being determined, we're dedicated, don't quit attitude, unfortunately high pain tolerance, and problem solvers, through unconventional and innovative ways, which kind of drove us to Reg CF. We didn't like the way that VC firms and other capital raising methods, terms and conditions in there. So anyway, those traits, combined with our collective experience, really got us to where we are today, and will continue to drive us as we go forward. And I think the last thing I'll mention about the team is that we've all worked together in the past in some various capacity. So we know how each of us operate, so we can kind of shoot, move, and communicate very well. And there among the team, there's no slack given, and none is expected at all. So how did we get here? Well, it first started off with anger and frustration, as all good companies do. As mentioned, we worked in the defense services contracting world. You're nothing but a sophisticated staffing agency for the U.S. government. But our role and our job was really to source, recruit, and manage staffing positions, across thousands of labor categories from various industries that include almost everything: IT, healthcare, aviation, logistics, you name it. We had our fingers into it, and we were sourcing individuals to fulfill the government's requirements. So we were often required to staff these positions in very short periods of time, and otherwise we would get fined. So the stakes were high from a business perspective. So we would use every sourcing and recruiting tool available to us to meet those requirements. We had our own recruiting department, that would expand and contract, based on demand. We subscribed to all the various job boards out there, the monsters, LinkedIn, Zip, Indeed. We'd go to countless job fairs, and we'd even use, those pricey headhunting firms to meet our requirements. But even all those collectively still couldn't meet all of our needs. And we often found ourselves at the 11th hour scrambling to find these individuals with these unique skill sets and requirements that the government put on us, and we could never find them. So we would have to, all hands on deck and, find these individuals. And as an example, we won a State Department contract to fill a bunch of positions at the U.S. Embassy in Mexico City. One of those positions required to be a former DEA agent, have a security clearance, be fluent in Spanish, have financial crimes experience, and also be certified to give polygraph test. And we could not find that individual and all the resources that we needed. And of course, one of our ops managers comes up to us and says, "Hey, I have a thumb drive with a bunch of DEA resumes in there." And sure enough, we found that individual on that resume. So we were lucky that day, but we all knew that is no way to run a business, So so we set off to kind of fix that problem. With today's technology and the way data is exchanged all over the place, we knew there had to be a better way. So we kind of took one swing at that in the beginning, and we failed. It worked on a very small, petri dish level attempt, but once we tried to scale that solution, it unraveled really quickly. But we learned a lot. We learned a critical reason why the labor market is so messed up, and we found the root cause. So we decided to, take a risk, and we quit our jobs. We formed Oplign, and then we consciously decided to focus on the veteran hiring space for a number of reasons. One, it's needed. Veterans are truly underserved right now, but they are probably the most talented, professional, experienced individuals out there to, fill the jobs out in the North American labor market. We knew that market like the back of our hands. It also gave us a unique entry to companies. The larger the companies have these kind of robust, structured veteran hiring programs. And it was also a great place for us to kind of prove our approach and kind of scale without, drawing any attention to ourselves. So we spent about 2 years doing the heavy lifting. We ingested and organized and structured terabytes and terabytes of labor data. We had a select group of companies that allowed us to kind of beta test our programs, let us bang our knees and break it and rebuild it. And then finally success, by 2019, we had a viable product that we could roll out and start selling to customers. So where we are today, like I said, in 2019, Verizon was our first customer. They have a very well-structured veteran hiring program. Their resources wouldn't meet their needs, so they decided to bring us on, and we knocked it out of the park. Verizon led to us picking up USAA. USAA and Verizon led to Wells Fargo, and then toward the end of 2021, Amazon picked us up. We convinced them that, hey, our tool is so innovative and so state of the art, and they have such a massive requirement to support, veterans, and we knocked it out of the park as well. And it got to the point that, that Amazon customer really became like almost a watershed moment for us, or it really did. It really set the tone for 2022, where the tables kind of turned. We started getting contacted from other companies saying, hey, we hear you guys are helping these companies out. We want to know more. So sort of the second half of 2022, we really started to accelerate our growth. A couple of other unique things started happening on the right-hand side of that curve, the other y-axis. You see our user base started to grow rapidly as well, with zero acquisition costs. So, right now on average, we get about 200 plus, veterans that come into our site a day, and we started to see the network effect. The more individuals we had in the system, the more companies were attracted to that, and the more companies we had into the system, the better reputation we had among the veterans. So we're really starting to see this kind of leapfrog effect, right at the end of 2020, and that's continued to grow. So I'm going to go ahead and turn over to Mike. He's going to kind of show you what our secret sauce is and the technology that we've used to kind of break the code on this. So with that, I'll turn over to Mike.
Cool. Thanks, Jeff. And I'll run through sort of my slides in 5 to 8 minutes, and there's time for a demo at the end. But the real reason that this works is that we make something massively complex and costly push button simple. So again, that's what automation is for, is to take something that really sucks and make it easy. And that was from a guy from A16 I was watching, not me. So what we do is we basically fully structure, measure, and value all the data in the demand side of the labor market. And it's funny, no one ever thought of this before, because it's not how many resumes are in front of you. It's just, I have a demand to fill. It's this job. It's this many bullet points. I have to have these things. It doesn't matter if I have 1, 100, or 1,000,000 resumes in front of me. If none of them have these 8 things that I need, it's all useless. So literally what we said is, you know what? We have to go out and we have to map all the demand labor in the world, which we didn't realize quite what we were saying, or else we wouldn't have started. But once we started, we couldn't quit. So what happens is, once you make all the demand in the world a 1 and a 0 and put it on a regression model where you can take any person in the world and immediately tell them which companies have jobs for them, where those jobs are, and how much they can get paid for them, you create a positive ROI for a company. And the bigger the scale, the faster the ROI in weeks, not years, because you're not wasting any time on any searching, on any alignment, on any awareness, et cetera, et cetera. This drives money. So why we're successful is because we make our clients money by closing demand faster. And what I mean is the only reason they're advertising for jobs is they're going to take that person, put them to work, and then basically make money off of them. That's literally why companies organize the way they do. They make money off of their employees by selling products. So this is the simplest way to understand that we broke down everything about finding a job or finding an employee or finding what skill I should take, or finding how long and how much it would cost to get upskilled. Breaks down to 3 very simple things. We automatically align all the labor to all the supply, and it happens in about 60 seconds, and I'll show you how it happens here at the end of this discussion. And once they're aligned, we have scaled awareness. Literally, we can see all the targets. It's, some of it's like seeing the matrix. Once you see it, you can't unsee it. And if you're automatically aligned and you have scaled awareness, then we can give you the optimal actions. And that's not just for individual users, but for companies as well. And where all this came from, again, why did we come up with it and nobody else came up with it? Well, because that's literally the way special operations works. Your whole idea is to find the target. So it's out there on 100 by 100 kilometer square. It's hidden someplace. You got to figure out where it is. So you're always segmenting. You're looking for it. You're finding it. You're closing on it. This is just Army speak for what we do. We find, fix, and we fight from both sides, from both the individual looking for a job and the company looking for the most qualified individual. This is how the military does it. All the telemetry, the uplinks, the downlinks, the terabytes of data moving around. Well, they only have that because they know what they're looking for. They know what it looks like, and they know how to segment against it. So the easiest way to think about it is we are radar for the labor market. So we say, hey, we're radar, we're sonar, and we're SIGINT, all rolled into one. Like there's all these things happening that allow you to be smarter and to expend the least amount of resources to get to the point where you want. And, for those of you that we're in the military, the IC, we simply do it like the NSA does global electronics communications. We're always listening to what Boeing and 3M and Ford and Hilton Hotels, Amazon, they say exactly what they want every night. They broadcast it, and we just pick it up and turn it into data. Because, all radar is just data in the sky. And so if you can see it, you can relate it, you can see time, distance, size, all that. So this is just an example of radar is just a technology that allows you to see data in the sky. Before the technology allowed them to see data in the sky, if you look really closely, this is before radar. There's something called war tubas. This is San Francisco in 1942. These guys are literally listening to the sky. That's how they looked for airplanes. Now, I don't know how they told if it was ours or theirs, cargo or fighter, whatever, but that's what they were doing. So right now, for those companies that don't have Oplign, their HR, they're just listening to the sky because a resume comes into them, has no filtering except for what the person sending it to them has done. So again, there's no way to filter a resume when it gets sent to them and into their ATS unless they go and open it up. So literally, there's a bunch of barrels show up on their warehouse, and they don't know what's in it until they open it up and look at it. And so this is why there's all these statements on, we have a problem. People can't find jobs. We can't find who we're looking for. It's like, no, they're all out there. You're listening to the sky, or you're just dumping stuff on the warehouse floor and then sorting it out. So again, this is why we have supply chain management. So we don't have this. And the person that actually originates the demand, the SME someplace inside the company, can't get what he wants because the entire system is analog and it's broken and he can't just push a button. Well, that's where we changed it. So we're shifting the way the system works from this game of telephone that candidates play. And by the way, the numbers are dismal for the way HR does its business right now. only 10% of candidates that start an application even finish it. And it's primarily because it's so hard to finish, because the company goes, hey, give us a resume. Now deconstruct it into 80 fields. So if you're valuable, if you're a software engineer, if you're an electrical engineer, if you got a clearance, you just stop. You don't need to do this. You'll just go talk to somebody, and most of the candidates that do finish it aren't qualified. So all those resumes they end up looking at, they're useless. So this is the stat that we've discovered, and we knew it going in, but we now have the data for it. 85% of hires don't come through the standard pipeline process. They're not applying. They're not submitting resumes. They talk to somebody in operations, and then operations decides to hire them and then takes them over to HR to process them. So all of it's coming through the back door right now. Well, I'm going to show you if you just hit that little Oplign interface, if it's on a company site, if it's on our site, it's on a third-party site, 97% of candidates that start the process finish it. That conversion rate is unheard of in this industry. 100% of the candidates that are qualified are passed through. 100% that aren't qualified are stopped at that point. And literally a third of the folks that we pass over end up going in and making an application. So we make the systems that are in place now work better, and we make everybody aware of what needs to be done instantaneously. And we've been doing this so long now, and we've been grinding so long that we've got it down to, hey, there's really only one button a company needs to use, and that's it right there. We have the ability to show them the top candidates instantaneously because we have it down to a single metric. That metric we call operational measurement, evaluation, and prioritization. Think of it as the combine test for a football team. Hey, the NFL draft is all about the combine. We can show you the best athletes all the time, every day, from everywhere, so that you don't have to go out there. Again, it took us a while, but we got to a single, basically large meatball button. And so that's led to basically this, where we're at now. Why are we doing arrays? Well, as Jeff was saying earlier, we talked to VCs. We didn't like the direction that we're going. They didn't ask us about our vision, about our operations. They basically just wanted to take control. And we're like, well, why would we give you control? You don't know what you're doing. So we got to a great level with our customers. We have a very full pipeline this year. Every one of these companies that you see right now has had at least one, if not 3 meetings with us. And some of these are about to have their close meetings in the next couple of weeks. But we will get at least half, if not all of these customers in the next 2 quarters, or someone similar to start using the system. And again, as you said, when Amazon came on, and then Kite Pharma, and then Los Alamos, and, Amentum's about to come on. It's once they come on, their customer or their competitors see it, and then they have to jump on. And the funds we're raising, as you can see, we're building products that make it better, that make it scale faster. So Small Business Veteran America is so every small business can use this automatically, and every veteran that wants to go back to their hometown can see where it's at. The VetLine Optimal Connector is so veterans can help other veterans get jobs faster, et cetera, et cetera. So that's where we're at. It's a good problem to be in now that we're like, we don't know which way to grow because there's so much going on. And so here's literally what we're using the money for. We're Build Small Business Veteran America. There are 600,000 vet students in America right now, and we have a way to clear them all for every company that wants to hire them. So the great thing about veterans is, no matter what your MOS was, you have a bachelor's degree in how people work, because you've seen some messed up things, and you're going to apply those to the workforce no matter what you majored in. And then the Optimal Connector is, again, think of it almost like Facebook LinkedIn for veterans, because when veterans go on LinkedIn, they take off all their tribal colors. So I'm going to jump into a demo. This last one was just, hey, and this is in the next 14 days, we're demoing for all of these companies. And so some of them are fairly new. Some of them, this is the last one before they go live. But just to show you that we're basically hitting that inflection point where the word is getting out, and these companies inbound to us. We didn't have to go out to them. So that was the real key to this, is we got to the point, as Jeff said, where there aren't any acquisition costs because now folks are coming into us. The word is out there, and people can see it out in the open. And so what I'll do is, I'll go screen share here, and let me get the right screen.
Hey, the one thing I failed to mention is that Verizon USA, Wells Fargo, and Amazon have all renewed their subscription. So we're on our third year with Verizon, and now in our second year with Wells USA and Amazon. So good product validation and customer happiness.
All right, let me do my screen share. There it is. All right, so I'm going to go through a few things. It'll be a little bit like a Tarantino movie for the first 5 minutes. Again, because the technology works so differently. But let me start with what you're looking at right now. What you're looking at right now is a high-level report of how many veterans, that would be almost 4,400, have come and used our product at the Amazon site this month. And so I'm going to show it to you this way, and then I'll actually go over and use it and show you what I'm talking about. So this thing that says record, that's branch rank MOS. So again, the things a veteran understands about themselves that allow them to get this data in the system with 3 or 4 clicks in about 20 seconds. This right here is the key to why Oplign works. And I wanted to show you this number before I go over and show you how this works. As you can see, was it 4396? 4323. So that's about 98.5% that create a record created this thing called skills. So with that, let me just go over here and I'll show you what this is. So this is the Amazon website. This has been up for over a year. That 4,200 number, that's just people doing this. So a veteran sees that, they're told, hey, come on over to the site. They'll come over to the site, they'll hit it, and they'll just do this. They'll say, oh yeah, here's my email, here's my name, here's the state I'm in. And then the rest of this is we've optimized it basically in the last, 3 or 4 years so that they can just say, yeah, hey, I'm on the U.S. Army, I'm an E6 or I'm a WO or I'm an O. We'll use an E6 right now because we have a real bias to trying to help the enlisted guys. I've been in 7-8 years. And then here it's just, put in that you're what you are. This is what I am. So whatever you are, you can just type it in here. Are you active getting out? You're active, but you got more than 6 months. This actually makes folks available for something called Skill Bridge. Or you've been out a few. We're like, oh, well, you've been out. What do you do now? So way back when I started pontificating here, I talked about targeting. I talked about segmentation and targeting. And so what we're doing here is this person just said E6, U.S. Army, 5 to 10 years. I've run back to the giant database of about 120 million jobs that we've seen in the last 4 years. And what we've been doing with those is we've been, mercilessly creating Pareto curves about what the market cares about. And what you're looking at is the answer in real time, by the way, to what makes an E6 25 uniform out of the Army valuable to the global labor market. It's not things they want to tell you. It's things that you care about because they're literally in the job descriptions. So we know you're enlisted. You got a high school degree. Hey, do you have an associate's or bachelor's? Is it in a specific type? That'd be really good if it was. Oh, here are the certifications that we're asking about or that everybody is asking about the most. Yep, I do these things because literally that's part of my job description as what I do in the military. We know about 18% of 25 series guys will have this. It's very valuable to the market, so it's asked. Do you have the passport and driver's license? Can you write code? Can you work with these operating systems? Can you work on these cloud platforms? You do different things as you progress through the military. You'll have some of these. You won't have all of them because there are different flavors of 25 uniforms or 25 tangos or whatever you are. So now you can be like, yep, this is what I do in my day job. I do these things. Really don't do the integration. I'm not really big on the development side. I can write command line, but that's not really development. Yeah, but I am a data engineer and I do electronic warfare, And who isn't a data center engineer when you're in the military? Because you're always in a data center. Things that they might have done in the military that companies don't ask in this way, but the translation is done on both sides. So the key to this is neither the individual or the company have to translate anything. The system is doing for it. The system is presenting it in the correct language and context for both sides of the market here. And now that I've gone through and I've done this and I told them what I've done, again, what I just did, I showed you earlier, 98.5% of people do when they get to this page. When they click save, the key to this is they just click save. Now we know on Amazon now knows if that person is qualified or not. And I'll show you in just a second. But now what this company knows is here are the jobs at Amazon that I am qualified to interact with. Well, remember, hey, I clicked that I was a data engineer. Look, there are data engineer jobs for you. They're right here. There's the information security, the DevOps jobs. You can open it up. You can see exactly what the company is asking for. This is what Oplign does. It picks up this information here that's in string text. And since we've been looking at it and interrogating it for the last 5 years, we know what the code is behind any of these things and all of these things. Because all we're doing is we're picking up that code, we're regressing it back to the common platform, the common language we made. And we know anytime they're clicking this, we're adding the code, we're putting it in. If they want to click on the job itself, boom, there's the job. For Amazon, we now know this person's value, this person, what they're looking at, what they're going to. We're basically, again, the military version of we're tracking and targeting so we can see it at all times. This works for anybody. Say, all right, Navy, let's just change. I was a Navy hull tech instead of being a network guy. You're going to see if you click save, it'll be a very different interaction. The system is always slewing and queuing, always looking to get this person's data out of them as fast as possible. It's the same here at, here's Los Alamos National Labs, branch rank MOS, looks the same. These guys love this so much that if you click search by skill set, well, this is us. Hey, you're a civilian. Great. Do you have this level of competence or education? Can you do these things? And are you a chemist or a biochemist or whatever? So it's universal. It works all the time. Again, here's Kite Pharma. Very different than Los Alamos or sorry, hit the wrong button. Veteran Opportunities. Boom. Same thing. It's universal because we can target everywhere all the time. And what I was going to show you is where that data comes now if I am Amazon. So all those people that are coming in all the time. We're basically running the combine on them. So now here's what's happening at Amazon. I hit that button. Who are the most valuable people? Well, here's, because I can look at, there she is right there. She came in from a syndicate. E7 information technology specialist, 12 years of doing things they care about the most. So all these folks right here, he has a TSSCI, he can write all kinds of languages, computer science, all these courses. This is somebody that is highly qualified. And we know because right here it says he's qualified for 116 jobs at Amazon. This is his combine score. He's near the top. He went off and looked at this job to apply for it. He looked at these other two jobs right here. So
hey,
again,
Mike, let's leave some. Sorry, I don't want to cut you off on this great stuff, and also want to leave some time for anybody's Q&A. Does anybody have any specific questions? You can, let us know in the chat or ask right now. Just we want to be respectful of your time as well.
Yeah, I'm going to facilitate that, Jeff. So anything else, Jeff?
We've answered a lot of the questions in the chat, but if anybody else has anything else.
Yeah, I do want to make one comment. I've been in the software business for 20 years. I've never heard the term meatball button used in the technical demonstration. So I just want to congratulate you on that, Mike. Great stuff.
That came from the MIT guy, by the way. He says, yeah, everybody wants the meatball button at the end of the day. I'm like, okay, let's make it.
All right. That's awesome. I do have someone's asking about pricing and delivery model. That's the question that came to my mind as I watched this impressive demonstration. Can you kind of elaborate, Mike or Jeff, on what your pricing models look like?
Yeah, pricing is a function of the size of the company and the number of jobs they have in the industry, and then it's delivered as a SaaS model. Sits right on top of the company's systems. There's no integration or required, and it's like a monthly subscription. We found the larger the company, they pay all up front, and then the smaller companies usually pay on a monthly basis. But the ROI on this thing is tremendous because they're paying a fixed fee for unlimited licenses, and getting all this data at their fingertips to engage with these individuals faster than waiting through their current systems.
That's awesome. Can you elaborate a little bit on what non-veteran markets might this be applied to in the future? I mean, clearly you've focused on the veteran population and it's pretty impressive, but there's pros and cons, I guess, for moving away from that. Can you address other market segments that might be attractive for this kind of approach?
Sure. So I just popped this open for Los Alamos National Labs because what you can see is it's literally everybody. So this is they're using this for any person that comes to Los Alamos because it's level of education. It's the things Los Alamos values the most, really, like this type of education. And then,
hey, Mike, they can't. When you click on it, it goes to another screen.
I apologize. Yeah. Sorry. All right, so I won't share it. Here, I can do it this way. Sorry. So basically, it's all markets. The only reason we can do the veteran market is because we can do all markets. Because it's really just how do you put the veterans into a commercial market? And so it's the demand side of the market that matters most. So if I go, I'm doing the Man from Oz thing here. So if Amazon, right now we're in with veterans because it was the easiest wedge into these corporations. Now Amazon's like, yeah, we want to do everybody. We're like, great. It is literally level of education. If you have a clearance or not, that we can change that. That's what they care about right now. And yeah, I'm a chemist, or yeah, I'm a financial analyst. Doesn't matter. We start the targeting process. Now, what we're really doing for Amazon next is something called Oplign, which is doing internal skills tracking and the economic optimization of who gets trained next on the veteran community could get the next job. So again, it's inside the enterprise. We'll optimize them before we optimize outside so that you don't have to spend money recruiting because you're just promoting your people faster, training them better, holding the culture, all those good things that consultants like to talk about that we just have the data on now.
Yeah, that's just awesome. I want to go back to Karina's question in the chat. She's talking about what's the rationale for one-year contracts versus longer-term contracts. Now, I know pricing models evolve all the time for SaaS companies, but what's your philosophy now on what's your longest contract in years and your shortest? And then how do you guys view, whether or not you let someone sign up for a longer duration or not? There's pros and cons to that. Can you touch on that?
Yeah. So we have, a 5-year contract with Bering Strait Native Corporation, and I think Kite Pharma is 3 years, and then the other companies are just year by year. And we usually just, what's the company's desire? So they usually come to us and go, hey, we want to have this out for 1 year base and 4-year options. So we're, I guess right now kind of a little indifferent, but open to any length of contract.
Excellent. Now, do you have month-to-month contracts for smaller companies, or is that not worth going after? Given
the minimum is 6. We require at least a 6-month commitment. Only because this is a game changer. It's somewhat disruptive to a company's current process. So by the time they get it on board and and they kind of get used to it, and they kind of see the rhythm of their demand kind of expanding and contracting over time, it really does take about 6 months to really see the value that this is producing. If we just, a lot of people will come to us, go, hey, I just want, 10 Intel analysts with a polygraph, TSSCI contract. Hey, that's great. And you need to sign up and commit to this program. You're like, oh no, we don't want to do that. So they don't do it, but then they'll cut away and then they'll come back 6 months later and go, hey man, we really need these people. Well, if you would have signed on, you would have had 6 months of collecting these individuals over time, and you wouldn't have to worry about it.
Yeah, I'd like to drill down on that comment because it led to another question, which is time is money. So especially a highly specialized job opening. So have you had any customers tell you, geez, it used to take us on average X to fill positions, and now with this, it takes X minus or X plus even? I mean, have you gotten any data around that or any subjective feedback?
Yeah. So I'll just say it's funny. So what you're looking at right now, this is Amazon. I'm like, oh, Amazon, where all their jobs are. They're looking for network managers. Oh, they're looking for a lot in Virginia. So I'll click on it and I'm like, all right, they're looking for this open positions in Virginia. So here's what they're looking for. Guys with poly who are really experienced. So this guy, this is what it says. He came in today. So sometime in the last 8 hours. He's aligned to 70 jobs. Amazon will see him today. An Amazon recruiter is going in and will see this. He's got a poly. He's in Virginia. This guy's ideal for us. He will email him and said, do you want to talk? They do that every other day. They go in and they look for the folks that have the TSSCI, they're IT guys, they're in the location they want. Their yield is 2 out of 3. 2 out of 3 guys that hit this, that they go back to, come to them. Amazon basically closed 500 TSSCI jobs last year just by doing that, because it's a sensor. Like I said, it's radar. Whenever something that you want is there, it tells you it's there. If you go talk to this guy first, he'll commit to you. So, and at the scale of it is also kind of crazy. So if I go back to that first chart we were looking at, and to your point, John, all these companies in Northern Virginia, like, oh, we can't find TSI guys. We can't find TSI with poly guys. We're like, look, of those 4,000 dudes that came to Amazon last month, 741 had a TSSCI, 131 had a poly. And you know who they're talking to? Amazon. Because this button is not on your site. If it was on your site, they'd talk to you. So, yeah.
All right. We got time for one more question, which came in. I'm looking at Jim's question about your pipeline. Can you kind of speak to your projections for 23 sales growth compared to where you see it in a couple of years in 2025?
Yeah. So from 2021 to 2022, we grew our revenue almost 4x. For 2023, based on the contract renewal and new customers that we're talking to in the pipeline already, expect to exceed $2 million in 2023. By 2025, we expect to be $15 million in revenue, and that's consistent with kind of this rapid network effect that we're seeing, and the kind of word of mouth, so as well as to some of those new product modules that we have that are, ancillary to the core veteran project, like Mike mentioned, with Oplign and, helping workforce development type stuff.
Yeah, that's impressive buildup of pipeline, although none of it's guaranteed, just to be clear, as you probably would admit, right? But it's just a good list of names here.
No guarantees.
I think I recognize most of them.
Only opportunity. That's right.
All right.
Yeah. So look, in the interest of time, because I'm pretty tight on that, we're going to wrap it up. I am going to put a call to action up here, which is a little button anybody watching live can click, and you can go to Oplign's offering on our platform. Again, we're a SEC registered broker dealer, so on our website and platform, we have live offerings, Oplign being one of them. This link will take you to theirs, where you can get all the information you need about Oplign. And then in the next day or two, we will have a business update posted that will include a copy of these slides and a link to the recording. But for everybody that took their time out of their busy day to be here live, on behalf of Folla Capital and Oplign, I want to thank you very much for your time and attention. Jeff or Mike, any parting thoughts?
No, thanks for your guys' time. Yeah, and when you click on that call to action, our business plan and all our projections and all that, they're in detail. So there's a lot of information. So spend some time there if you're interested.
That's right. And you have Folla Capital's generic information right there and my own contact information. So thank you very much. That concludes the webinar. Have a great day.
John.